The QC Technologies Inc. share price is currently sitting right at $7.04 USD, pushing up by $0.12 or 1.73% for the session so far. You see that green figure on the screen, and you probably think this is just another standard day for a small-cap tech stock trying to find its footing. But the reality bubbling underneath this ticker is something far more volatile and possibly far more significant than a simple percentage point gain suggests. The expectation most traders have when they see a chart like this is that they are looking at a speculative microcap, likely a pump-and-dump candidate that will fizzle out by lunchtime, especially given its history. However, the reality is that you might be staring at one of the most aggressive, high-stakes pivots in modern market history, a company that was, until very recently, a pharmaceutical firm, now claiming to have cracked the code on computing speed using lasers instead of silicon. If their claims hold even an ounce of water, the implications for the semiconductor space and stocks like NVIDIA stock could be uncomfortable to ignore. We aren't just looking at a stock movement, we're looking at a company attempting to bypass the physical limitations of Moore's law by switching the medium of computation from electricity to light. To understand why this price level of $7.04 is so critical, we have to strip away the noise and look at the engine driving this sudden interest. Most retail investors, the kind who might usually use Schwab Intelligent Portfolios or Fidelity Wealth Management for safer, long-term plays, would likely glance at QC Technologies and see a stay away sign because of its volatility. That is the safe, conventional wisdom. But the contrarian view, the one that is currently driving massive volume into this ticker, is that the market is starving for an alternative to the GPU shortage that is bottling up the AI and crypto industries. The narrative here is quantum class computing. Notice they do not say quantum computer in the traditional sense, which is still years away from commercial viability for most. They use the term quantum class because they are using photonic or light-based processors to solve specific optimization problems right now, today, not in a decade. This distinction is what is catching the eye of aggressive speculators. While the giants like Apple stock and Tesla stock are fighting over silicon wafer allocation, QC Technologies is betting that the future isn't silicon at all. Let's look closely at the intraday action we are seeing right now. That 1.73% move up to $7.04 isn't a slow, steady climb, it is a battleground. We are seeing sharp spikes in volume every time the price dips below the $7 psychological support level, which indicates that there is a bid underneath this market. Someone is accumulating. When you see a stock that has recently exploded in value, remember this stock was trading significantly lower just days ago, consolidate and hold a level like $7 often signals that the initial hype phase is transitioning into a price discovery phase. Traders who bought in for a quick flip are exiting, and a new set of holders, perhaps those betting on the longer-term light solver technology, are stepping in. It is a classic transfer of ownership that often precedes the next leg of a move, provided the broader market holds up. If you are sitting at home using a Robinhood app or an interactive broker's account, watching the Level 2 data, you will likely see large block orders sitting on the ask trying to cap the price while persistent buying eats away at them. This tension is palpable. The elephant in the room, and we have to address it because it is driving a massive amount of the social sentiment, is the involvement of high-profile, controversial figures like Martin Shkreli, who recently highlighted this stock. When a figure like that gets involved, the expectation is immediate chaos, a meme stock frenzy that detaches from fundamentals entirely. The reality, however, is that while the volatility is indeed fueled by social sentiment, it forces the market to actually look at what the company is doing. It acts as a spotlight. Without that spotlight, QC Technologies might have remained an obscure ticker. With it, engineers and serious tech investors are now asking, wait, does this laser processor actually work? This is where the tension lies. Is it a meme, or is it a mispriced tech breakthrough disguised as a meme? If you are managing your own funds through self-investing or using investing sites, you have to separate the personality from the product. The product here is the QCLPU 100, a laser processing unit. The core of the excitement and the risk lies in the physics. Traditional computers, the ones powering your SoFi trading platform or the servers at Fidelity Investments, use electrons moving through transistors. There's a physical limit to how fast you can push electrons before they generate too much heat. This is why data centers are currently consuming massive amounts of electricity and why NVIDIA stock is so valuable. They're the best at managing this silicon limit. QC Technologies is proposing a different path, using photons. Light moves faster than electrons and generates virtually no heat in comparison. The light solver technology they have licensed aims to use this property to solve combinatorial optimization problems. These are math problems that are incredibly hard for normal computers, like figuring out the most efficient route for a delivery truck, the traveling salesman problem, or, more lucratively, finding the most efficient way to mine cryptocurrency or train an AI model. If QC Technologies can prove that their LPU can do this 100 times faster than a GPU, the stock price at $7.04 will look like a rounding error in hindsight. However, we must remain grounded. The transition from a pharmaceutical company, TNF Pharmaceuticals, to a quantum computing hardware company is abrupt. It's the kind of pivot that screams red flag to traditional analysts at Fidelity Brokerage or Fidelity Mutual Funds. Usually, when a biotech firm fails to get a drug approved and suddenly decides it's a blockchain or AI company, it's a desperate attempt to keep the listing alive. This is the expectation of failure that bears are betting on. They are shorting this stock expecting the tech to be vaporware. The reality we need to investigate is the validity of the light solver IP. If the intellectual property is solid, then the shell of the old pharma company was just a vehicle to get this tech to the public markets quickly, avoiding the long, drawn-out IPO process. This happens more often than you think. It's a reverse merger in spirit if not in name, and it allows regular people using Robinhood Investments or SoFi Invest to get access to venture capital stage technology that is usually reserved for private equity. Let's pause on the market mechanics for a moment. We are seeing a lot of chatter on forums about Robinhood Crypto and Robinhood Cash Management users moving funds into QCLS. This retail flow is powerful. Unlike institutional money, which moves slowly and deliberately, retail money moves in a swarm. When thousands of traders on SoFi Active Investing decide a stock is the next big thing, they can dislocate the price from the fundamentals for weeks or months. Right now, at $7.04, the market cap is still relatively small, meaning it doesn't take billions of dollars to move the needle. A few $1 million of inflow can send this thing halting upward. This is why you see those volatility halts. It is a liquidity vacuum. Conversely, if the narrative breaks, if the company misses a deadline or the tech demos fail, the exit door is the size of a keyhole. You have to understand that buying this is not like buying Fidelity ETFs or putting money into Schwab Intelligent Portfolios where you have diversification. This is a singular, concentrated bet on a binary outcome. Either the lasers work or they don't. Speaking of diversification and holding strategies, I want to hear from you guys. Comment below how many shares of QC Technologies you currently hold, or if you are waiting for a dip to enter. Are you in this for the quantum tech, or are you just riding the volatility? It's always fascinating to see the split between true believers and momentum traders in the comments. Now, back to the analysis. The broader sector context is vital here. We are in a compute crunch. Every major tech company is screaming for more processing power. Tesla stock is driven by its need for compute to solve full self-driving. Amazon and Microsoft are building nuclear reactors just to power their data centers. In this environment, any technology that promises green computing, high power with low energy, is a holy grail. QC Technologies is positioning itself exactly in this narrative slot. They are marketing their LPU not just as faster, but as sustainable. This is a key buzzword for institutional investors. If they can get an ESG, environmental, social, and governance stamp of approval because their laser chips use 90% less power than a rack of NVIDIA H100s, that opens the door to a flood of capital from Fidelity Wealth Management